Good evening, students. Good evening, students. Can you all hear me? Can you please say whether you can hear by typing so that yes, can. Thank you. So my name is Shankaramurthy, and I've been a lecturer at a private institution, right? So this year Sri Lanka arranged pre-scene discussion of your paper, 2024 December SL2, that corporate financial risk management pre-scene discussion we are going to do. I believe you have a copy of the pre-scene, and I'm sure you would have gone through a couple of times to understand the case. So anyway, I'm trying to take it through before going into any specific discussions, just to get an idea about the case. It's about a company called Ecom Logistics PLC. So when you read the name itself, you should know that it's a listed company. It's a listed company in the stock exchange, and it has a history. If you have gone through the case, you would have seen it has a history where the two, Roshan and Kamal, have joined together and started a company in logistics in 1993. So in 1993 only they have started, and if you look at it, is one person is a engineer, the other person is, any guess who is the other person? Roshan is an engineer, mechanical engineer, and Kamal is, can you hear? Students, who is the other party who joined with Roshan to start a business? Kamal, yeah. So they are, what he is doing? What is his professional qualification? Exactly. He's a qualified accountant, right? So you would have gone through the case, I believe, like it, otherwise it's not meaningful. So as per the case, there are two, Roshan and Kamal, who started the business of logistics in 1993, and they talk about what are the businesses they are involved in. If you read it, what are business lines they are involved in? Any business lines they are involved in? I'm sure, like, can you please say what are businesses the company is involved? Ecom logistics. Yeah. Sea and air freight. Yeah. Sea and air freight is, it's a freight forwarding business. Under that, you have different segment. Logistic business. The freight business is the one of the business line. Second, exactly. Warehousing, transportation, then clearing, right? So there are four segments they are talking about. Even though the financials are given uh, amalgamated without giving the segmentation, but if you look at the businesses, there are four business lines. There are four business lines they are involved in. So we should be clear about the business lines they are involved. That is transport, transport, warehousing, and freight forwarding, and the clearing. So these are the businesses they are already involved in. Give me a second. So the company has how many staff they are talking about? How many staff they are talking about? Anyone? What is the total number of staff this company has? 120? No. I think if you read it, anyone else? 250 staff, right? 250 staff are working in this company, and these are the business line they are talking about. And they deal with many agents, shipping agents, aircraft, air travel parties, all they are involved with. Actually, if you should know that this business line is a, yeah, number of employees 250. So total, this company, it's mainly involved in logistic services where the customers, it could be any exporter or importer, could be wanting the goods to be transported from a country to Sri Lanka or Sri Lanka to another country. So this transportation is involving either sea freight or air freight. So in the both sides of it, the company, this e-com company, has to deal with the customers as well as the shippers or the airlines. They have to deal with and arrange a space for the goods to be transported. If it is shipping lines, you are talking about containers to be kept in the vessels and transported. So you need to book the space, manage the documentation, and arrange the transportation from the warehouse of the customer to the port. Similarly, if it is aircraft is going to do the transportation, you need to do the same thing to the airport. So please note that this is the business line they are talking about. The examiner or the case study has given enough information about this business related information, what kind of processes they have, how they manage, and how the technology is used, how the technology useful for this company, and those things have been discussed in detail, even though it's not directly relevant to the our case in terms of the financial management subject, but it could be useful for any other subject because there are four subjects use the same case. Okay. Then when you go to understand the pre-scene, you will see that the company, when they incorporated, it was a 50-50 ownership company. It was a 50-50 ownership company. Roshan and Kamal invested 50% equally. And they started with the bankers loan also with the shareholders' money they started. But during during 2015, something they decided to do. What is that? Anyone? 2015, the company decided to do what? Anyone? 2015? Yeah, exactly. They went for IPO. They went for IPO. So if you looked at the ownership after the IPO, it's given in page 4. Page 4. When you look at the ownership structure after IPO, it is Roshan has 30%, Roshan has 30%, Kamal has 30%, and public has 40%. So you could see that the ownership of the company after listing, 40% ownership is with the public, and 30-30 are with the two founder shareholders who are Roshan and Kamal. So we should know that he still, even though the company listed in 2015, still the controlling of the company, that is 51% control, is with the two founder shareholders. So we should know that structure first. Then they go to say, after listing, they've been doing the carrying out the business and they are doing really good. Only thing they realize there is a opportunity to grow their business. That is where there's a company called Ocean Shipping Line. Ocean Shipping Line is a company which is available in the market. You could invest. So Ocean Shipping Line, who are the owners at the moment? Anyone? Ocean Shipping Line, who are the owners? Sorry. So the company got to know about Ocean Shipping Line, and there is a one shareholder who has already has 24%, who is called, what's his name? The shareholder name? I believe you all will go through the case. If you're not gone through still, you have to go through the case and to understand who are the shareholders. Actually, one shareholder is Ajanta. Ajanta has 24% ownership in the company. Then Ecom, that's company our case is about. Our company has decided to invest in that company and they have invested 26%. So Ajanta and Ecom both together own what percentage of the company? Ocean Shipping Line? 50%. 24 and 26. Balance, not 51, it's 50. 24 and 26 together. So 50% ownership is with the Ajanta and Roshan. Sorry, Ajanta and the Ecom. Balance 50% is owned by family members. There are four family members own the balance 50%. So the case says four family members own 50% of the company. This is about Ocean Shipping Line. Ocean Shipping Line 50% is owned by four family members. Out of four family members, two family members are not in agreement with the other two family members in terms of operations, and therefore they are willing to sell their shares. So you should know that the shares which are available for purchase by anybody is 25%. So already Ecom own what percentage? Already Ecom owns what percentage? Anyone? 24. No. Ecom owns only 26. Ajanta has 24. Any other students? And there are many students have joined, but no one is communicating. Okay, so 24, exactly, 26%. 26% is owned by Ecom and Ajanta owns 24%. And out of 50% balance, family members, four family members equally own it. That means two shareholders or two family owned shareholders, family people, but they are two shareholders who are willing to sell their shares in the market. That means 25% is offer in offer. So you have Ecom has 26% and another 25% is in offer. That means how much percentage? If you buy Ceylon Shipping Line's two shareholder shares, what would be the ownership going to be? Anyone? If 51%, very good. So 51%. So please note, this is the area the examiner could go to check in your unseen material. That is where you are 26% ownership at the moment. Ecom owns 26% in Ceylon Shipping Line. Another 25% is in offer. So you could buy the balance 25%. Then you become 51%. And according to the information available, Ceylon Shipping Line, Ocean Shipping Line is not performing well. That you would have seen in the financial also. We'll come to that later. So the company is not performing well. So according to Roshan, if we control the company, we will be able to turn around the company and make it profitable. So therefore, he is also believing we buying the balance shares would be a good idea. So please know these are the case study pre-seen level information. So what you should be clear here is unseen material, the examiner has a definite chance to say that to buy the 25% balance so that you become the controlling interest. Now buying is not an issue. The question could be, the possible question could be calculate the value of the shipping line company. The ocean shipping line company, you have to value in order to find out what is the 25% we have to pay to buy the company. So please keep in mind that one of the possible area of testing is the valuation of ocean shipping line. Why we have to buy the another 25%. So the possible thing could be the examiner could give in your unseen material ocean shipping line future cash flows after you taken over the control. That is Roshan or Ecom takes control of the ocean shipping line, what could be the possible cash flows that company could have? Not the based on present cash flow. Present cash flow is not that great. It's not very attractive. But after you taking over, definitely you can run the company and turn around. So when you go to turn around the company, they probably could give you cash flows with a positive, attractive cash flow. Then the question comes to value the company based on the forecasted cash flow. So you may use the free cash flow based valuation and calculate the value of the company. That value of the company, 25% only, you have to pay to the family shareholders and buy the company shareholders. So then once you buy, it becomes 51% control. So please understand that this is the one, I would say, one possible area of testing for the valuation chapter to say that you are going to do acquisition of Ceylon shipping line. Already you have 24% or 26%. Another 25% you can buy from the family shareholders. Then you become the 51% control. So that's basically the one of the area which is relevant, directly relevant to the financial side of the paper. Then they are talking about the segments, what these segments are all about, and they what kind of processes they have. That those are the pages number 8, 9, 10, 11. All that four pages are talking about the business model and the supply chain of ELP. And the strategic business units are supposed to be under freight forwarding. Under freight forwarding, the strategic business units have been told as air freight import, air freight export, sea freight import, sea freight export. Now, please note this company has four main segments we talked about at the beginning: freight forwarding, transportation, then warehousing, and the clearing agency. So the first one, the freight forwarding, that could be the main business where they connect the customers with the shippers or the shipping lines or the aircraft companies. So that's your main business. In the freight forwarding business, they are given you four sub segments, which are air freight, import, export, sea freight, import, export. So please note that these are the area where the examiner, ideally it would have been better if the examiner given the pre-seen level, the segmentation, revenue, expenses, all that, but they have not given. So we could expect that will be given or that could be given in the unseen material, and then you may be asked to do some evaluation based on the segmentation. Second area, what I would be saying, the question is talking about, or the case is talking about, concerns related to the recent board meeting. Page number 12. So, page number 12, if you could look at your page number 12, can you take page number 12 if you are already with the pre-seen material, right? So, please look at the page number 12. They say concerns raised at a recent board meeting. So they talk about in the last board meeting, they have realized that the company present ongoing issues and poor financial performance. We come to the financial later, poor financial performance. So according to the board meeting discussion, they are worried about the performance of the company, and it has been observed for the first time since the company establishment. This is the company which has been started in 1993. From 1993 to today, such a long period, if you really look at, this company has performed very badly during this year, right? It doesn't mean they have made profits 20 billion or something in the previous period, but what they are trying to say is the performance, right, that dropped. It has dropped. Okay, so page number 12 of your pre-scene shows that concern, and more importantly, they are talking about page number 12. The board is committed to identifying. Board is committed in identifying root causes of these performance issues and developing a strategic plan to enhance operational efficiency, financial stability, overall growth. So please understand this is another possible question where the examiner is asking what could be the root causes of these performance issues. So one we talked about, it's a valuation of the ocean shipping line. That is because we are going to buy the balance 25% most likely. So therefore, free cash flow based valuation question can be asked on that. Second, the root causes of the performance issues, which is another possible area. We will look at the information with the financial, but then some of the information may not be available in the pre-seen level. So you may have to add on your understanding with the unseen material and find out root causes of the financial performance. Okay, the financial performance. So that's another thing what I would say. You may be asked to do calculation and show why the performance is not that great, where the problems are. And if you really look at your pre-seen pages, I think it's if you go to the page number 7. Can we go to page number 7? Yeah, page number 7. If you take the page number 7, review of ELP's financial performance and corporate governance. That's the heading they are given, page number 7. Review of ELP's financial performance and corporate governance. So, according to them, at the recent board meeting, the finance director of the company presented a report on the company's financial performance for the year ended 31st March 2024. So, your year is, for your case, is the 2024 March, the latest year. And that report highlighted a significant decline in key metrics. First thing, the revenue has fallen to 447 million or 447 billion from 576 billion. Okay, so the actually the this case the values are such a large values given, so don't get confused. Be clear, it is 576 billion actually, and 447 billion. So it's basically 22% decrease compared to last year. Revenue has dropped. Then GP dropped is 40%. They are given you GP drop. You can calculate in your PNL also, but then they are themselves have given revenue dropped by 22%, GP dropped by 40%, and the operating profit also dropped 53%. So you can see the revenue drop, GP drop, operating profit drop. Then they take a profit before tax and net profit. Also, they say that was a drop by 54 and 48%. However, they say the non-current assets and equity has gone up. Non-current asset and equity has gone up. And this is the summarily they have mentioned. But when you look at the appendix 1 and 2, that will support this number calculation. Number, you can look at your page number 14. Page number 14, your PNL. That shows the same turnover drop and the GP drop and your operating profit drop and your profit before tax drop. So all these numbers are used from the annexure what is given in page number 12, not 12, 14. Page number 14, your PNL is given. So the drop is visible there. It's not a very deep, complicated PNL. It's a simple PNL given. Revenue from contracted customers, cost of sales, GP, other income, selling and administration expenses, profit before operating activity, profit from operating activity, finance cost, and share of profit of associate, and profit before tax and profit after tax. Now, by looking at your PNL, can you tell me what is this associate company? Students, can you all share? They, in the P&L income statement, they are talking about associate company. What is the associate company? Exactly. Ocean Shipping Line. Ocean Shipping Line. And how much percentage we own? Ocean Shipping Line. What is the percentage? 26. Exactly. So please note that the P&L shows 26 percentage of Ocean Shipping Line result in your P&L. Can you please take page number 15, sorry, not 15, page number 16 and 17, right? That is the Ocean Shipping Line, balance sheet and P&L. When you take your Ocean Shipping Line, that is the page number 17, last page, can you take the 235 million loss? That's the loss of the Ocean Shipping Line. 235 million loss. And we own what percentage? 26%. So 235 million into 26%. What is our relevant loss? Yeah, right? This is 61 million. So you could see that the accounting treatment of associate is done properly. They have taken 26 percentage of the Ocean Shipping Line loss and taken into your PNL. That is ecom. Ecom is our case. Our case, PNL or ecom logistic PLC PNL as 61 million associate loss. 61 million. So we know it's associate company's loss we have taken. So that is to ensure that you have taken it rightly and from the PNL of the Ocean Shipping Line. Then going into the PNL of the ecom logistics, your revenue has dropped, everything has dropped. Okay, and that's what they are very much concerned about why this drop happened compared to last year. And they mentioned that this kind of a bad performance was never experienced in their history. So we should be finding out what are the causes of this drop. The information at the level of uh, case study pre-scene level, it's not number related. They are not given much. So we should be given some more information in unseen for us to elaborate your reasons. But we could basically look at the same ratios, but they have already mentioned GP ratio, and then we can say it just dropped. But then the causes of the drop was not so clear. So that is why they say in the board meeting they have discussed and said the board is committed. Board is committed. Page number 12. Board is committed to identify the root cause of these performance issues and developing a strategic plan to enhance the operational efficiency, financial stability, overall growth. So please be aware that the board has decided to go into detail to find out the causes. So maybe the examiner could give in the unseen material some more financial information which could be useful for us to understand or analyze further and identify where the root causes. Now, why I want to say this, because as I mentioned at the beginning, there are four segments of businesses here. What are four segments? And there are a lot of people joined a little later, right? So you would have missed it, but you could watch the video because it's recorded anyway. There are four segments we talked about. What are segments? Anyone who were there from the beginning? Yeah, warehouse, transport, clearing. And the first one is what? I think you all missed the first one. That's your main business most of the time. Anyone? Logistics? No. Logistics is all together. The overall thing, broader business scope is a freight. Sorry, logistics. But the main business of this company is freight forwarding. Freight forwarding. Freight forwarding is basically you get the customer's goods and ship it or aircraft, air freight it. So what you understand, there are four business lines: warehousing, freight forwarding, transport, clearing. So we don't know exactly which contribute what percentage. We don't know. That analysis cannot be done because it's not available in the pre-seen level. But definitely the examiner could give you in the unseen level if he is expecting you to do some more analysis to find the root causes. So based on some of the past paper questions in the past, the examiner gives the pre-seen level many segments, right? It could be, say, for example, supermarket and engineering, finance company business, or it could be a manufacturing of some tea. So it could be different segments they could give you at the pre-scene level. Then what is expected? You could analyze the case in a segment wise, and your profitability ratios can be calculated. Many profitability ratio can be calculated for each segment. So if the examiner give you an unseen material, this segment separately, then you are supposed to calculate the ratio analysis. That's the tool we generally use to analyze the case, analyze the segments more detail, and identify which segments are performing well, which segments are not performing well. Maybe, for example, the freight forwarding may not be doing well in terms of air freight, or maybe the sea freight has got into difficulties, or maybe the transport business is not doing well, or maybe clearing is not doing well. So you need to identify these segments ratios and identify and say that okay, these are root causes of this overall performance drop. So please make a note that at the unseen level you could be asked to analyze the case into that level, so that you could say that these are the root causes of the your performance drop. Your revenue has dropped, so you can say that what segment of revenue has dropped. You can't just say the overall company revenue dropped. So okay, fine, 50% revenue has dropped, but which segments has contributed this drop? Sometimes your transport segment may be doing well, but not the warehouse, maybe not the clearing, not the freight forwarding. Even under freight forwarding, sea freight may not be doing well, or maybe the air freight may not be doing well, or maybe the air freight import is not doing well. So, what please understand, ocean shipping also have share of profit from associate, meaning they also have associate. I think I explained that. That's a ocean shipping line. Ocean shipping line also has an associate. Yeah, but it's a 40 million profit, right? So yeah, you're right. They have a shipping associate company because that is mentioned in ocean shipping line in the balance sheet. If you look at the balance sheet, ocean shipping line, they have investment associate. So it's very clear that they also have associate. Okay, that is we don't know anything about the information about that, but they have associate. That's all we know. So they can ask about that also, but we are still at the ecom level. Ecom level. Ecom is our case, main case. So ecom having associate investment in ocean shipping line. I'm not talking about that still. I'm talking about your key business because your profitability, if you look at it, it's not small amount. How much profit you have made? Even after drop of significant 50 odd percent, your profit is how much? Anyone? How much profit of the ecom? Yeah, 21, not million. Huh? According to the information, it's billion. 21 billion profits. So I can say that it's a huge profit. It's not small. Huh? The 21 billion is a very huge profit. That is after drop. Otherwise, 41 billion last year. So 41 billion has become 21. That is 50% drop in the business profits. So that means something serious wrong with the business. But I would like to tell you this freight forwarding or the logistic business in Sri Lanka. In Sri Lanka, one of the highly market capitalized company we had. Anyone? Any idea? It's now delisted. Exactly. Exactly. Very good. So you all are very clear about that background of this thing, right? Expo Lanka. So still you can access to Expo Lanka annual report. You just type Google Expo Lanka annual report. You can see the annual report of them. I would appreciate if you could go through the uh, glass through. I'm not saying that you do an audit of that accounts. It's only a matter of you going through to understand what had happened in the overall turnover, overall profits. I think they also have the same situation, right? So only thing is you need to go through that to understand. But they are not one company. They are a large group. They were a large group, right? Even though they are delisted now, but a large group. So the performance has come down. So you can just go through to understand what had happened. But our case is not exactly the Expo Lanka, right? So you should know that it's a some idea for you to get the what kind of business it's all about. You can go through the annual report so that you get some idea. Okay, that is for your better reading before your exam. You can go through that to get better idea about the company. Otherwise, it's not a normal business line where trading or manufacturing, something where you are very familiar with. It's a different nature of business where your income is the commission that you get for the connecting the customer or the exporter or importer with the shipping line or the airline. That's basically the business you are doing. And the warehousing. Your warehousing is where you have space, where you have buildings, where you can keep the or the large area of land where you can keep the customers' containers, and you can export it, or when you import it, you can keep the container in your yard or maybe the space where the customer will come and pick it, or you will deliver to customer. So please understand this logistic business properly. The customer could be maybe in, say, Polanaru. He want to export the goods. So the customer manufacture the goods and he is waiting for you to come and take it. So you can provide transport, bring the goods from the Polanaru to the port, wherever the port is, and keep the goods till the shipment can be exported. Till that point you keep it in your warehouse. So you understand that you do the transport business and you have the warehousing business, then you have the freight business. And in the freight forwarding business you have to do the clearing also of the goods, right? In that, in terms of clearing, there's another business line you have. So these are the four segments they are talking about. So please get this idea of the business properly, because then only you can contribute to the questions whatever they could ask. Then going to the, so I told you up to now I have mentioned about two possible area of questioning. One is about the acquisition transaction of ocean shipping line, where they could ask you to value the ocean shipping line. In that case you need to know the ocean shipping line financials. They have given you a P&L balance sheet, but unfortunately you should know that ocean shipping line is not performing well. Their equity is only 625 million and they are loss making company. So when you are going to do a free cash flow based valuation based on the P&L loss, it doesn't make any sense because it's a loss making company. But when you, Roshan and Kamal's company, Ecom, when they go and take over the balance 25% in ocean shipping line, they can turn around the company. That's a belief they have. So if that is the case, you should know what is your future cash flows after turning around. So that's why I mentioned that you need to forecast your future cash flows. Most likely, unseen material, the examiner will give you information with the forecasted information of the ocean shipping line after you take over. After you take over. So if you take over, what is the possible cash flows? Based on that, you can do a valuation of the ocean shipping line and basically calculate the 25% ownership what you should pay to the two shareholders who are in the family. So that's the one area I can think of possibly they can ask. Second, it's about the root causes of this performance drop. That's why I mentioned there are four segments. Even under freight forwarding, there are another four segments. So they can give you enough information in the unseen material where you need to analyze the segments by calculating many ratios, which is generally the profitability ratios. You can use GP margin, selling profit, what you call net profit margin, operating profit margin, and return on assets of each segment, and you can calculate how they are contributing, and you can mention whether they are performing well or not performing well. That could be a one of the area, and they can give you balance sheet or maybe the assets allocated for each segment, and then we could see that whether the asset allocated is giving us return enough. So what could be a possible ratio is the return on assets. So each segment you can calculate return on assets, and you can say whether they are performing well or not. So if the returns are very lower for the assets you have allocated for each segment, now one other thing you could see generally is the warehousing. So warehousing, right? Warehousing business, you may go and invest in a land and large building. Land and building you could have invested. But the return what you could get could be very small. Why? It's a warehousing business mean the customers, the containers could be kept in your warehouse, or maybe you have space to allocate for your customer and your return could be very small. It can't be very large, small return. So you have invested large amount of what you call land and building value you have invested, and your returns could be very low. The problem where you should know that ideally these are the businesses where you don't invest in the land and building, you would try to lease out. You will lease out your land and building, because then your investment on these assets could be lower. So you're not putting your money or you're not borrowing money and investing. So you save money. By leasing out, you pay lease rental, but still it's worth it. Why? There you are going to manage your facility and earn return without you going and investing in the land and building. So please note that this could be another area you have to think of. The return on assets have to be calculated for each segment and see whether it is worth it or not worth it. So you need, because this company the performance had dropped, so we should find out the reasons properly. So maybe the further ratios could be calculated with the segmentation, and we can comment about that segments, which segment is doing well, not doing well. Maybe the freight rates could have come down. Freight rates could have come down because in 2022-23 period, the freight rates went up heavily. Even Sri Lanka point of view, I'm sure all of you all know that 22-23 was the period of this economic crisis. 22-23. So that period was economic crisis where everything went up. And what was the average inflation we had at that period? Anybody? Average inflation? 7.5%, 70%. I think it was average 70% inflation we had in the country at that time. Not 30%, not 60%, not 7.5%, it is 70%. So please understand that it was the period where we had average 70% in the country, most of the goods and services. But there are certain services in this business we are talking about freight forwarding and the transportation. It could be more than 70%. So you should know that freight rates, AROC would have been very high during 22-23. Therefore, you also benefited and you got a huge revenue, huge revenue. But 23-24, it was not the same period, same situation. The revenue dropped could be because of that. So please have an idea that your revenue had dropped. Maybe the freight rates were last year was very high, so you also benefited out of it. Maybe this year it's not the same. So please understand that that's one of the area you can keep in your mind. Then there are question. Any question? Strategic risk, financial risk, reputation risk can be expected. Yeah, yeah. That's another area of risk management. So the question could be going to ask the risk management area of the case. That's why I wanted you to read the case couple of times so that you will have some idea about the case and processes, because the risk could be in each of these processes you could face, but they have to give some more information, right, for you to explain about the risk faced by the company in the market. The inflation could be another issue, could have been there, and economic crisis, that itself a risk. Economic crisis of the country was a risk itself because the imports were higher or lower. During the crisis period we had more imports or less imports. Exactly, it was very low. It was very low. The overall economy was in crisis, so you had lesser import. When you have lesser import, of course you should understand your freight also lesser, because you are not importing, right? That means you are not using this. Yeah, will come. There are a lot of discussion we have, right? We have just started on certain things, right? So first we are talking about the risk point of view. There are risks the company has faced, especially the crisis period. They had gone through a difficult times. Why the imports and exports could have, export wouldn't have come down, but imports have come down drastically because of the demand. Economic crisis resulted in the people consuming, consumers buying power came down. Consumers buying power came down. When it came down, they are not able to buy goods. That means imports are lower. Imports are coming down. When imports coming down, of automatically your freight business or the shipping line also has to face the same impact. So that is also another important reason why the revenue could have come down. And the freight rates, I told you the rates should have come down because 22-23 rates went up heavily. So 23-24 it's not the same rate, so it could have come down. So we need to be given information, but we can think these are possible reasons why the revenue has dropped and profits have dropped. Okay, so those are the additional information you have to be given in the exam unseen, but definitely it will be helpful. Then coming to the question here, when we are calculating discounting cash flows for ocean shipping, whose perspective cost of equity should we use? Of course, the investor. Now, why do you worry about ocean shipping line? Because you already own 24% or 26% ownership, and you are interested in buying another 25 percentage of the family two members. So, if you are talking about you are going to own balance 25%. Also, you are going to value the company, which is the target company, Ocean Shipping Line. So when I'm going to value the target company, whose point of view we always have to do the valuation. Not only for this question, any question, whose point of view we have to value the investments. Investor, always investor. So in this case, who is the investor? Who is the investor? There are almost 100 people are there. Yeah. Who is the investor? Ecom. Exactly. So your when you are going to evaluate Ocean Shipping Line, your future forecasted free cash flows, if they give you or you ask to value the company based on free cash flow, please note Ecom cost of capital you will be using. Ecom. So Ecom WACC should be calculated. Ecom WACC should be calculated. As of now, we don't have any way to calculate the WACC or Ecom, but the examiner can give you information for you to calculate the Ecom WACC, which will be used to calculate the value of the target company. But if you're looking at the net asset value, it is 625 million. It's nothing. It's a small amount, 625 million. Why? Ecom is a very large company, very large company. So in the target company point of view, it's a small company, 625 million net asset worth, but it's a loss making at the moment. So therefore, don't think that it's a value, proper value or more appropriate value. All of us should be aware that net asset based valuation you should be using when? Anyone? Net asset basis of valuation you will be using when? Exactly. If the company is going for winding up, liquidation, then only you look at a net asset basis. Otherwise, the net asset will be the minimum guaranteed value. Always we try to go use with the other methods. And primarily, if you are talking about going concern company, primarily you should be looking at the what method of valuation? Exactly. Free cash flow. Free cash flow. Free cash flow will be the method. We'll be looking at it for a running company or a kind of going concern company. So please note that the examiner will be asking that possible question for valuation of ocean shipping line. Right? So that's about valuation chapter. Then we talked about the risk aspects of it. I told you there are many segments involved. So you analyze the ratios and look at the root causes of the problem. That is a possible area. Third one is the riskiness of the businesses. There are riskiness. When I say riskiness, you may be needed or you need to know calculate leverages. What leverages? What are leverages you have learned? Leverages, cash flows. Yeah, operating leverage and financial leverage. Very good. So, operating and financial leverages are leverages. So, you should be familiar with the ratios. Please go through the theoretical classes wherever you have followed. Please go through the theory classes and find out those leverages formulas. Make sure that you are clear because the examiner possibly asks that calculate the riskiness of these different segments. They can give you 4 segments and ask you to calculate the leverage. So, you need to calculate operating leverage and financial leverage. So you need to calculate based on the ratio what you have learned, calculate and see whether riskiness is higher or lower in different segments. So now I have mentioned about 3 questions possible: valuation area, riskiness analysis area, third, root causes of the loss, lack of performance or less performance. Third area. Fourth one, somebody mentioned whether we have to worry about any other hedging related aspects. Definitely, yes. One other thing you should be clear, these shipping line businesses, are they exposed to exchange rate risk? Are they exposed to exchange rate risk? Anyone? Very much, very much. So even though the examiner has not touched in the pre-scene about the exchange rate risk, but we should be clear that this company is very much exposed to exchange rate because they work with the shipping line airlines. So they have to invoice, you have to pay in foreign currency, you have to receive in foreign currency. So you need to be clear here. Your transactions are relevant to foreign currency. So therefore, exchange rate risk can be one area the examiner could be testing on. So this is another area possible. That is fourth area I'm talking about. Now we go to the ocean, not ocean shipping line, ecom P&L and balance sheet. Can we take the ecom P&L and balance sheet? Page number 14 and 13. P&L and balance sheet of ecom. P&L, even earlier we talked about the revenue had dropped almost significant percentage, and then operating profit has dropped, profit before tax has dropped, all are significantly dropped. So that ratio already examiner has given in a pre-scene. Even you can calculate and double check, but the numbers are given. Nothing that you have to again spend time in calculating, because this is very simple P&L they are given. So we know that there is a profitability is a problem at the moment. But when you look at the finance cost, one of the important area in most of the time in financial management is the financial strategy. Financial strategy. How this company has funded, or maybe the gearing ratio. If you look at the finance cost, 983 million, 983 million. And if you take your gearing, can you look at your balance sheet? Can you look at your balance sheet, page number 13? Everyone? Page number 13. If you look at the balance sheet, this company has equity of how much? 82 billion. 82 billion. Whereas your liability, loans and borrowings. How much are loans and borrowing? Including lease payable, 31 billion. Can everyone check that number? I'm sure you know, right? So what is the gearing ratio? Anyone? Yeah, I think that's what the area we are talking about. Your at the moment balance sheet has given borrowings and lease payable together. Borrowing and lease payable together. Right? So at the pre-C level, what you can do is always consider both of together, because you can't segregate the borrowing and lease. So both together and calculate your gearing. I think there are people who have calculated, right? So you are 82 billion equity and 30 billion what you call the borrowings and lease payable. So it comes to somewhere around 28%. Now, 28% is borrowing and lease payable. Now you should be clear here. When we say lease, the lease needs to be a created to be a debt capital. Now, if you take the this example or the question, you can see that this company has what? Anyone identify? Right to use assets. Right to use assets. So what is right to use assets? You know that right to assets will be based on your vessels or lease assets. You account for your assets and a liability. So the lease liability is where it's included. The lease liability is included in your. It could be exactly the warehouse land could have been taken on lease, where you don't seems to be owning a vessel, right? You are not owning a vessel. If you are owning a vessel, you can have a liability for the vessel also, lease liability, right? If you are taken the vessel on a lease, then lease liability could be there. So we are not given that information. So by the right of use asset is there. So maybe the land what you're taken for the warehousing could be on a lease. So you have asset and liability. Now that liability, that lease liability, whether it is a falling into the debt capital, right? So it's a your accounting entry where you are showing asset and a liability. But financial management point of view, are you going to pay interest on this liability? No, it's not. Right? Financial management point of view, it's only accounting point of view. Yeah, it's a lease liability for the right of use assets, but it's not the debt capital. It's not a debt capital. If you are taken a bank lease where you have to pay interest, of course, yes, then it's basically a financial liability also. But here it's the accounting thing, so you could exclude your lease liability. Examiner has to give you further information to break the lease amounts. Then you can remove that and calculate your gearing ratio. Okay, but as of now, the pre-scene level, we don't have a segregation or we don't have a choice in segregating. So we go with the present information and calculate the gearing, which is somewhere around 28%, somebody mentioned. And your finance cost, if you take it, is a small finance cost, right? It's only a small finance cost in the P&L. I'm not too sure how that finance cost has been calculated, okay, because it's 983 million. whereas your borrowing and lease payable is 31 billion. So 31 billion, even 10% if you take, it's around 3 billion finance cost. But it's only 983 million. So we are not too sure how that number has been arrived at. But overall, when I look at it, this company is high geared company or low geared company, financial management point of view. Whether this company is high gear or low gear? Low gear. Very good. So everyone knows that this company is a low geared company. Why it's relevant to us? Why it's relevant to us? It's a financial strategy of the company. Financial strategy of the company. Financial strategy of the company means how you financed your assets. So your company has financed assets predominantly by equity capital or debt capital. Equity capital, right? Finance cost is lower and your debt is lower. Finance cost is lower, debt is lower. That shows that you are not borrowed sufficiently. Now the question comes whether I should borrow money or not borrow money, or I should borrow more or less. For you to answer that question, what needs to be checked? Anyone? Any part? No, I didn't still come to cost of debt. I'm still on the gearing. Always remember, right? Always remember whether you decide to borrow or not. You should first check whether your company's return on asset is more than cost of debt, right? Yeah, the capital structure, even the capital structure can be 20%, 40%, 60%. That doesn't give you the answer whether I should borrow money or not. If I know my return is more than cost of debt, for example, I borrow 10 million and I can invest the 10 million for whatever the business and earn 15%. I can invest 10 million and invest and earn 15%. That investment, my cost of debt is 10%. So return what I can get from the investment is 15 and my cost is 10%. If that is the case, the answer is what? Sorry. Exactly. It's MM theory. Yeah. No, if you have returned more than cost of debt, should you borrow money and invest or not borrow and invest? Whether you understood your capital structure area or not will tell you whether you can answer properly on this or not. If your return on asset is more than or return on investment is more than cost of debt, please borrow and invest. That's the gearing uh, definition where you can borrow and invest so that your shareholder will benefit. Your shareholder will benefit. Only thing is when you are going to do that, you look at your capital structure also, because if your capital structure already is high capital structure, you have borrowed heavily, then you are not recommending to borrow money. Please understand that. If you already borrowed 70%, 80%, you are not going to borrow further. Right? Already if you have borrowed more than 70, 80%, don't borrow further, even though your return is more than cost of debt. But if your return is more than cost of debt and your leveraging or gearing is lower than 50%, always recommended to borrow. Now, I'm not going to a theory class now. I'm only asking you whether you understood. If you not understood capital structure theory properly, please watch the videos of our lecturer and make sure that you understand capital structure. Because under capital structure, we have learned your return has to be more than cost of debt for you to borrow money. Right? Second thing, your capital structure, you should not go beyond high gearing or extreme gearing, which is like 75, 80% gearing, don't go. Even though return could be more, don't go to that level. Now tell me, this e-com, low geared, high geared? Answer. Exactly. Low gearing. So we have to recommend for borrowing. That is your financial strategy. Now, why do you recommend you to borrow? Why do you recommend to borrow anyone? If your company say return is more than cost of debt, you are asking them to borrow money and invest. Very good, very good. Tax benefit, tax benefit. Tax benefit is the main reason. So you need to understand your financial strategy has to be effective, right? Your finance advisor is effective. Now you can't be just borrowing and invest, but if you are business, please borrow and invest. Now tell me, this company, do they make money? Are they making profits? Very much, very much. They are making very good profits, right? So when you look at the profit they are making, return on equity. How much return on equity? Anyone? Return on equity is how much? Profit after tax, which is 21 billion divided by 80 odd billion equity. So profit after tax is 21 billion and equity is 20, 80 odd billion. So you are talking about 25 percentage you are making return on equity. 25 return on equity, a good return. 25 or 26% return is good return or bad return? Very good return. Very good return. Right? Please understand your company had made a 25% return. But the problem is your 25% return to your 25% return, last year how much the return could be? Your last year profit was how much? Double. Last year profit are double. So that means you have dropped by so much, but your last year profit return was very much higher. So you should know that this business is doing really well. Even though it has been a 50% drop in terms of profit, the business is doing well, very well. That, but your drop is during the year, but your profits are very good. Now, when you look at it from the gearing point of view, my question where I stopped, your gearing point of view, your low geared company and your good profit company, if you have borrowed further, would have been benefited to shareholder or not? If the company had borrowed further, shareholder would have benefited or not benefited? Definitely benefited. Why? Your tax shield would have benefited the shareholder. Further, your cost of equity is always, can you complete the sentence? Cost of equity is always higher than what? Cost of debt. So cost of equity is always higher than cost of debt. So if you can borrow a cheaper and you have a tax benefit, who benefits? Definitely who the beneficiary. If your financial strategy has given you the support to borrow money and invest, shareholder would have benefited. What is the primary objective of the corporate? Maximize the wealth of the shareholder. So if you want to maximize shareholder wealth, ideally your company financial strategy should have borrowed further or reduced the borrowing. So the possible area, the question under the why the root causes of the problems or maybe why the company profit could have been further increased or could have been increased is company financial strategy was efficiently done or not. Financial strategy not done. Very good. So can you make a note? Yeah, I'll come to that point. Firstly, understand financial strategy point of view. Have you borrowed sufficiently? I'm not talking about borrowing and keeping the money. I'm only saying instead of equity money, you should have used more debt money. Understand that. You should have used equity, debt money more than equity. Why? You are a very good profitable company. Very good profitable company. So you have tax saving. Otherwise, you are paying tax unnecessarily. You are paying tax unnecessarily, right? So you could have easily saved the tax. Okay, so that's one noting you should have, right? So then we have talked about the profitability side and the gearing point of view or the financial strategy point of view. We have answered. Operation strategy issues are the ones which could be done with the further segmentation information if they give in the unseen. you can analyze and say operating strategies, whether they have done the business properly, they have charged the prices properly, whether they have excess space they are keeping and not utilizing. Maybe you can calculate the asset turnover ratio and say their warehouse facilities not occupied, warehouse facility not occupied properly, or they have containers not occupied properly. You can say those things. Small company ocean pay 1.5 finance cost, even they small company compare econ. Yeah, I think we should not be comparing ocean shipping line with the e-com, because e-com is a very large company in that way, right? Please understand, e-com is a very large company. It's not at all comparable to ocean shipping line. So please don't compare those two companies, because it is not going to, it's not a comparison effective. So we ignore that comparison effective. But we valuation point of view, we'll do the calculation and all. That's a valuation. But for the comparison, you don't have a benchmarking information or industry information. If the examiner give you industry information, we can compare and say whether your performance is good or bad. So please keep that in mind. Then moving on to the balance sheets related. So we have looked at gearing and the P&L profitability side we have looked at. When you look at a balance sheet, now the important area is what? Any other important area? Anyone? Yeah, you are straight away going to cash. You should look at the liquidity. Look at the liquidity of the company. Whether your liquidity is higher or lower, or sufficient, not sufficient. In order to pay 44 billion current liabilities, in order to pay current liabilities of 44 billion, how much current assets we have? 118 billion, which is more than two times. More than two times. Okay. So we should know this business requires your liquidity also. You need liquidity also. Don't ignore the fact that uh, this is a freight forwarding business where you have to involve in more cash related transactions to the customs, transportation. There are many things where you may use cash. At the same time, in order to manage many customer requirements, you need to be managing your liquidity properly. So we can't conclude saying that liquidity is very high, so it's a problem. No. But we should know that the liquidity is there, sufficient liquidity is there to meet your current liabilities. Sufficient liquidity is there. So it's a good thing. Good thing. But whether it's excessively you are having the cash and cash equivalents is something we have to decide only if you look at the some comparable information either with the industry or maybe the old information or the past information a couple of years. So you can see that 23, 24, both years we have liquidity more. That means the cash and cash equivalent more. If we are given extra information, additional information unseen, where we identify we have enough liquidity and we have excess liquidity, then as somebody mentioned, we can say that the company can use the excess liquidity, do something. What are possible things you can do with excess liquidity? What are possible things we can do with excess liquidity? Anyone? If you have excess liquidity, exactly. One is share buyback, repo investment. Come on, it's not about investing repo. Investment can be done, of course, but then please understand the investment has to be a larger project investments. You should invest in a project investment. That is one, right? Second, we can, since they are not having assets, we cannot use net assets. No, no, no. We can use net assets. But I think if you have known your theories, financial management, valuation chapter, we don't recommend using net as a base of valuation. We don't go to use net as a base of any company, not for this company, any company. Why? That is the lowest value. That's why they started early asking, what when do you think recommend net as a base of valuation? Somebody mentioned already, some people mentioned liquidity, liquidation of the company, or when you call going up for winding up. If you are going to winding up liquidation, you use the net assets. Otherwise, don't use net assets. But you can use net assets to say this is a minimum guaranteed value. But you can always use the free cash flow based valuation and calculate the value of the company. So please understand that Net asset is not the valuation method. You could recommend any valuation, any target company valuation. So two things: excess money. If you find that unseen material, right? If you think that unseen material has liquidity, excess liquidity, we can buy, we can invest in the excess liquidity. We can use it for investment, one, or we can use it for buying back your shares, buying back your shares, or buying, or you can pay your dividends. You can pay your dividend more. So please understand that we have two choices: either to buy back the shares or dividend distribution. I think if you can recall the Expo Lanka, what did they do? Anyone? Expo Lanka? Buyback? Yeah, very good, very good. I think that's why I told you. You have to just go through that case, the real case. It's not the same case here, but then get some idea. But they also had enough money. They bought back the shares, right? Could you explain what we value OSL, whether you use OSLW? I think I answered earlier, right? When you are always and always, when you are going to buy a target company, we should use whose cost of capital. Get the theory correct. Any target company, if you are going to buy, any target company we are going to buy, exactly. Investors. Please make a note of that. You are going to use the investors WACC. Okay. So when you go to buy back, you can buy back the shares, own shares, and then use your excess money. That is one. Or you can use the borrowing to buy back also, because you have enough capacity to borrow. You can use your own money. If you need more money, you can borrow money and buy back. Second, you can invest in new projects. You can invest in new projects. Actually, if you talk about the ocean shipping line, the investment, if you want money, it's not very much higher. It's small amounts. That some small amount you have in cash and cash equivalent is enough to buy your target company. So I would say, like, it's not a significant investment altogether. It's not a significant investment. So liquidity point of view, it looks like we have excess liquidity, but some more information could be given in unseen, where the examiner can say the benchmarking information with another competitor information. You can see that excess liquidity is there or not, right? If the excess liquidity is there, two options are available: to buy back the shares, one, two, you to invest in new opportunities, investment in new growth opportunities. So those are two options available for the excess money to be used. So we are clear about that, the excess money or liquidity point of view. Then the coming to return on shareholders' money, it is around 20 odd percentage, 26 percentage we mentioned, and last year it would have been very much higher. So you have excess, or what you call return on equity, very high. So what you learn from that, when your business is doing really well, you have what do you do as a shareholder? What do you want to do? Because at the end of the day, primary objective of the shareholder company is to maximize shareholder wealth. And your company is maximizing. Why? Your returns are very high. So what do you do next? Dividend payout is definite. Dividend payout is definite. You can pay dividends. Excess, very good dividend you can pay to shareholders. But what else you can do? You can always grow the business. You can always grow the business. I think that's the important thing. Always grow the business. So please understand that you need to drop off performance, or we can go for debt capital infusion. How will interact? No, no, no. Please don't confuse both together. We were talking about, if you are going to invest further, you borrow and invest. One, you have any excess money, but still, if you want borrowing, you borrow because your capacity. Second, you need to understand, instead of your equity, instead of your equity, if you have used debt capital, your shareholder would have benefited more or not. Somebody is asking, what is the benefit? What is the link between gearing and tax benefit? I think your capital structure area. You borrow money mean your finance cost is incurred. Your finance cost is claimable against your profits. Finance cost is claimed against your profits. So finance cost when you are claiming against your profits, definitely your cost of debt become cheaper and shareholder benefits. That earlier example I gave you. I borrow at 10%, I invest at 15%. So 5% gap is given to shareholder. But the 10% when I borrow, I have a 30% tax benefit. So my cost of debt comes down to 7%. So really speaking, I get 15% and 7% cost. 8% gap given to shareholder. Okay. So this is your capital structure knowledge. Anyone who is not clear on this area, please go through your videos, whatever theory classes of any of your lecturer you learn. Please go through that and make sure that you are clear on that. Okay. And in the same meantime, I would like to say my videos, right? My videos for CA Sri Lanka, the webinar series I have done, which is there in CA Sri Lanka YouTube. So anyone who had not been watching that video, please watch, which is a summary form, different topics. We have a video in CA Sri Lanka YouTube. So you can go through that to get the idea of each of the chapter, right? If you are confused with any other knowledge, my recommendation, because always the capital structure knowledge has to be very clear for you to understand this gearing area. Otherwise, you are just blindly saying that invest, borrow money, invest. No, I am talking about your shareholder wealth can be maximized if you borrow and invest, provided your return is more than cost of debt. Return is more than cost of debt. Very important, right? So if you are clear on that, borrow money and invest. This company has not sufficiently borrowed and invested. So what is the recommendation you can say? Please borrow money and invest, but here there is no investment. If you don't have any investment, ideally buy back the shares. Ideally buy back the shares. Then your money can be used. Your money can be used to buy back the shares. Still the company will be benefited. Shareholder will be benefited. Okay. So that's your liquidity point of view, what you talked about. Then return on equity, it is very high. So the any shareholder would prefer to invest further. So that is why I told you you can borrow money and invest at the same time, grow your business. Your opportunity has to be looked at and reinvested. If you don't have any opportunity in the market, your residual theory under dividend policies, please pay dividend. Right? You can pay dividends because you don't have any projects. You don't have any opportunity to grow. If you don't have growth opportunity, you can pay. Right? So only thing you can look at it, which line of business is more attractive in this case. In this case, if you read it properly, which line of business is more attractive? You don't have much analysis here, but they have mentioned one thing: sea freight, ocean freight. Yeah, yeah, yeah. Which is attractive? Which is they are saying there are opportunities. Sea freight, ocean freight. Anyone? Students? Can you hear me? Yeah, ocean freight. Sea freight. Yeah. So please understand that if the sea freight is becoming more attractive and if you want to concentrate on that, maybe a possible area. What do you need? Now you are as a freight forwarder, you are connecting the customer, import export customer, exactly, vessel. Very good. You own a vessel. Now they talked about in a case, if you read it couple of times, read it before the exam, you read again the case, you will understand. They are understood there is a need for transportation of goods between the customer's warehouse to the port. So you provide the transport, right? You provide the transport. When you provide transport, you may hire the vehicle, lorries or containers, and take the goods. But after a point you would realize there are many customer demand your transport to be done, right? And then door to door delivery kind of thing, right? So they would like you to have the transport facilities, which are like you owning own containers, you owning the own lorries, are the possible option. Similarly, next step you can look at is what you can have own aircraft, you may own vessel. That could be a line of business. Expo Lanka had own what? Anyone? Anyone has idea? Your time, still more time. Expo Lanka, do they have anything owning in terms of exactly Expoya fit there now, right? So Expoya fits there. So that is their own one. So this is what integration and the merger acquisition. What is a merger acquisition? Yeah, forward, right? Forward. You are a freight forwarder. You are going and giving business to a shipping line or aircraft company. Why do you do that? You, if you have the own vessel, you connect the warehouse, customer's warehouse to the straight away. You go to uh, the other country's customer's warehouse or the supplier's warehouse. You can go to that level. So please understand, this is the whole what you call the supply chain of this industry. Margin increase, business continue, very good, right? So this is the business line. This is vertical, exactly. It's a vertical integration. Forward, but it's a vertical integration. It's not horizontal. Horizontal means you merging with a similar industry company. Similar industry company. So this is a vertical integration where you are going and merging with a forward line. That is where your aircraft you buy, or maybe you can go and buy a shipping line or a vessel company. So please understand that this is the line of business they are talking about. And a good example, Expo Lanka, I already told you. Please go through that annual report. Just go to understand that case just a bit more so that it's interesting for you to understand your case. Okay. So that's about your equity side of the story, return on equity and the balance sheet and P&L. And the examiner has given you earning per share of your company, right? Earning per share of the company. It's a listed company. So if you are given earning per share, immediately your mind has to work. You can do a valuation of the company by doing what? PE based. Only thing PE has to be given in the market, understood, unseen material. They have to give you the PE ratio, and then you multiply PE and get the valuation of the company. So that's one area they could be asking. If they are asking to value e-com company, e-com company. So in case they want to value e-com company for any purpose, you may also do that e-com valuation. Okay, so we have talked about the balance sheet of the company, liquidity, gearing, profitability, return on equity point of view. We have looked at it. Only thing we have to be careful where the leases are just the right of use asset leases, then it can be removed. Otherwise, it is part of your finance gearing calculation. Even when you calculate it, it is anyway low geared company, so you don't need to worry too much. Okay. Then the target company. Now coming to Ocean Shipping Line, balance sheet and P&L. Can you look at Ocean Shipping Line, P&L and balance sheet? It's a loss-making, smaller company, loss-making, but its turnaround can be done. They believe that they can turn around the company. So the P&L that is given may not be relevant for you to forecast the future cash flows, because then it's a loss-making cash flows. So you don't have to worry about the present P&L. They will give you the turnaround cash flows, or they will give information to find out the forecasted information to value the company. And balance sheet, if you look at it, Ocean Shipping Line has a very simple balance sheet, but only thing is the equity is 625 and non-current liability, long-term borrowing and short-term borrowing, when you take it, almost 7 billion liability. That shows that you are highly geared company. You are a highly geared company. Due to high liquidity, if they buy back shares, impact to gain share price. Yeah, yeah. If they can ask you after buyback, what would be the impact? Always remember, you can do the buyback because if you have excess money, if you realize that you have excess money, you can do the buyback. And unless you have investments, if you have investment, go for investment. Don't buy back the shares. Don't ever buy back the share, because why the shareholder gave money to company? Why the shareholder gave money to company? Yeah. If they don't give you further information about the lease liability, anyway, no choice. You take it as a debt capital. No choice. No. Okay. Every shareholder invest in a company expecting return. Okay. So if you can make more money and more return, shareholder would be benefited. So he doesn't want the money back. Don't do the buyback always. Buyback is only option when you don't have investments. If you don't have market, if you don't have investment opportunity, then buy back the share, because shareholder will prefer to get the money back. But if you have enough opportunity of investing, please do the investments. Then only you grow the company. Okay. So ocean shipping line buying, only advantage in ocean shipping line, when you buy the company, you have huge debt capital. Huge debt capital. What is the advantage? Not huge. The company perspective, that company perspective, it's a huge debt. So it's a good thing for us. Why? If you merge the company with Ocean Shipping Line, your borrowing cost can be claimed against your tax. So you have another benefit of reducing your taxation by borrowing or by buying the Ocean Shipping Line. So that is also another benefit you get. Please understand that apart from your valuation synergy benefit you get, you have another benefit of a taxation, because Ocean Shipping Line has taxation or the debt capital, which has a tax benefit. Okay. So those are the key thing, because the examiner in this pre-scene were not given very lengthy analyzable information in terms of financial. Okay, in terms of financial, not very much information given. As I mentioned, the possible areas would be the valuation for the ocean shipping line, or even for e-com. They can even say the e-com. I think like Lanka, what they call the Expo Lanka. What did they do? What they did last year, or maybe beginning of this year, not last year, beginning of this year. Anyone? It was a listed company. What they did? Exactly. They bought the shares back from the minority shareholders, then they delisted. So, in order to delist the company, also, they have to buy back the minority shareholders. In order to buy back the minority shareholders, do you have to value the shares? If you want to buy back the shares from the minority shareholder in order to delist your company, do you want to value the shares? Yes. So again, the valuation of which company we are talking about then? No need. You don't need to value the company to delist the company. You need to. You can't offer the way or you offer the value anything you want to offer. You can't do that. When you are offering, if you are going to buy back, you need to value the shares and say this is a valuation, fair valuation. You can't buy any price at any price. You have to value and say this is a fair price. Expo Lanka, if I'm not mistaken, it's about 185 or something. Right? They offer the value. Only thing the majority shareholder didn't sell the shares, which is a Japanese company. Right? The founder shareholders all sold it. So Japanese shareholder bought it. So Japanese shareholders, it's 80 or more than 90% now, I think. So please understand they bought it from minority shareholders and they value the shares. So even ecom could be valued. Ecom could be valued. Mean they could ask the question to value ecom, because ecom can decide to delist the company because they are major shareholders. And only thing is in this case, 40% shareholders are whom? 40% shareholders, who are the 40% shareholders? Possible share reason for share back. Ocean shipping line, it's a loss making, but if we want to turn around the company and buy, we can buy because we have already owned 26%. So if you want to safeguard our investment, and since we are in the business and there is a uh, the opportunity in this buying, we can buy this company anyway. We have to buy the company. Then we can turn around by buying the 25%, we can turn around the company. Possible reason for share buyback is what we looked at it. I think whatever we have discussed now. You have excess money and you don't know where to invest. You don't have investment opportunity. Then best thing is to buy back. Second, if your shares are undervalued in the market, you can buy back. Shares are undervalued in the market, you can buy back. So those are the reasons possible. So when you buy the minority shareholder, you have to give a fair value under SEC regulations. So you have to do the valuation. That's why I said e-com has to be valued. So the possible question can ask, but then e-com, the minority shareholder percentage is what percentage? What is the 40% exactly? E-com valuation is only 40%. So 40 percentage is a larger number. So if you are going to buy back the shares, you have to give a fair value and do it. That is one option if the examiner wants to ask the buyback option. Otherwise, they can ask to just to value the company and see that whether the market price is fair value, fairly reflected or not. They can ask a question. Then you have to do an independent valuation also. That's a valuation area again. So we have talked about valuation area in both sides and debt strategy is where you have excess debt or the less debt, so they can increase the debt capital, so that kind of area. Third, foreign currency risk management area they can ask because they are exposed to that. Fourth, what we talked about, root causes of the problems where the risk could be analyzed, that another area. Then your how the share buy decrease the number of shares. When you buy back the shares, please note what you do is, for example, I have 1 million shares. The company has 1 million shares. We are going to buy 200,000 shares back. Every shareholder, not one shareholder, every shareholder, we can offer and say we are going to buy back 20 percentage of your shares. So if you are having 1,000 shares, you sell the 200 shares to company. When the company get the 20 share, 200 share or 200,000 shares, that share certificate get cancelled. Then what happens? Your total number of shares comes down. When we buy back, your total number of shares comes down because the share certificate get cancelled. Hedging, I think that's what that foreign currency management is hedging. Foreign currency management is hedging. Hedging is but risk management. The terminology hedging is a risk management. It can be exchange rate risk management or interest rate risk management. So the possible area is exchange rate risk management, I would say, because last time paper had what question? June 2024. What risk management has been tested? What was the last? Yeah, interest rate risk management. So each answers are that foreign currency risk management for your area. Okay. Doesn't mean that you can't be tested, but possibly it is foreign currency risk management. Anything else? Right. So as I mentioned, this so the case has limited thing for us to look at in the financial side. Right. So any other areas, I would always recommend you to make sure that your valuation chapter, free cash flow based valuation and other methods of valuation, you have to master. You have to master. You can't have any doubt on that. Free cash flow to firm, free cash flow equity, what cost of capital relevant to discount. This topic or this theoretical knowledge has to be strong because the case study question out of your what you call the 100 marks, case study question 50 marks. Out of 50 marks, definitely examiner gives minimum 20 marks on valuation. And last paper, this June paper was 30 marks valuation, but generally 20 marks valuation. So 20 marks valuation means your free cash flow base has to be 100% confident in yours. Then if you are sure, you are getting the marks. So please go through at least 10 papers, right? As I mentioned, 7 papers of chartered recent 7 papers are in what you call the YouTube channel of CS Sri Lanka. Other than June 2024, I think all the balance 7 papers are there. So please watch those videos, right? Wherever you have followed classes, fine. But then if you want, you can watch the videos also. That will be helpful so that you have got good knowledge on these areas, topics what you are talking about. So valuation, capital structure, foreign currency management, and the share buyback. Okay. So foreign currency management, gearing, and share buyback, and the valuation chapter. So these areas have to be mastered so that you don't lose any marks on this case. And very important guidance I always say, out of your 100 marks, 25 marks are two questions. So always you can have the first attempt is 25 marks question. Don't try the 50 marks question. 2023 June paper video, yes, it's available, right? Yeah, stock turnover ratio is not relevant because it's a service industry, right? Don't look at stock turnover ratio, inventory turnover ratio, and all. Not relevant. Yeah. So the what I was trying to say is question one and two has 25 marks. Please try question one and two first, and try to answer every paper, every part. You need to answer every part of the question, and 50 marks question, very importantly, when you are doing the 50 marks, ideally I recommend 50 mark question you do last. That 50 marks question when you are attempting, please read all the parts of the question before attempting. Why I'm saying is, one good example is last paper. Last paper, last part asking about what are reasons for merger failure, right? What are the reasons for merger failure? And the 12 marks of the previous part is asking about tolerance, what you call this merger synergy benefit, how much you can get, give maximum. It's your basic synergy and the merger acquisition knowledge. So if you are clear of that knowledge, 20 marks you can get. The examiner B and C part, very easy question. But if you are try the A part, which is 30 marks, you finish your time. So the chances of you attempting the B and C is very remote. So my always recommendation is read the question, whatever the parts, and see what is best for you, what is easy for you. Try that part first. There could be very likelihood that some parts are connected to another part. But if there is no connection, always you can try the part separately. So what I would like to say is don't get lost in a large marks question because it takes time. It takes time. Then you are lost. Then you don't have time to look at even easy part. That's the last part last year, last June paper. Last part is merger acquisition. Merger acquisition, that is what they're asking why the merger failed. So that marks could have been easily got. But you have no time to look at that question because you are on the A part which is 30 marks. So my always recommended for my 20 years of lecturing, I can say that always recommended try to do the easy parts first. Why? One, you get marks. Two, your confidence level in the 3 hour exam increases. That is more important than anything else. The confidence level, all 3 hours. Yeah, I think somebody said 12 marks question. Very good. Yeah. So your confidence level has to be increased in the exam hall, not before exam only. Before exam, anyway, we have to increase the confidence level. Exam all 3 hours examination time, your confidence level has to be a peak. Don't give up at any point. Very important. Don't give up at any point. And especially those who have done exam previously, those people, please don't give up at any point. Even now, don't give up. If you don't understand anything, don't get confused. Don't worry about it. Try much as possible. Speak to few of your friends who have done, who are doing the exam. Share knowledge with others. Why important? Because even if you understood wrongly, the other person can correct it. If you don't share your understanding with another person, you are sometime with a wrong understanding and you try the exam and your cost is 6 months. That means you do an exam next time. Right? You fail and do it. Exactly. Until last moment, don't give up. Even exam all don't give up. Because when you look at the question one, sometimes it's a totally a new company, new question. You may get confused. Then you think you are puzzled. Then you give up. Then you go to the second question, you are not having confidence. That doesn't make sense. So what I would like to say is try much as possible. This question didn't have the precinct didn't have much analysis to be done in terms of financial, right? But read the question or the case couple of times to make sure that you are clear about the case. Don't ignore the case and go to the exam hall because that will be a utter failure. Okay, so please believe in you. Speak to your positive thinking people. Try much as possible and get motivated till the exam day. Till exam day, speak to people who can motivate you, can give confidence to you, and ensure that you are confident. And what is waiting for you is the CA qualification. which is giving you unlimited opportunities, right? So the CA has done a lot for all of us, and still it's doing. So we all are benefiting, and you all will be benefiting in the long run for a long time. So please make sure that you do your best and go through hard work. Don't give up. Don't take it easy. Right? If you have got through previous exam easily, don't think that is the same route you will get it. No, try much as possible. If you stuck, some people are stuck for many years. So what I would like to tell them is don't give up. Even at 40 years, you can become a chartered accountant. I'm not saying everyone has to become at 40. I'm only saying that even at 40, people have become chartered accountant because people didn't give up. People didn't give up because they know the value of this qualification, this prestigious qualification, and it's an unlimited value in your life. Right? The recognition, the money what you can get, and what the exposure you get, and exposure in terms of countries you get is unlimited. So my always recommendation: try hard, go through difficult times, you will get through. Speak to people, speak to get friends, good people who got through, speak to them if you don't have time enough. But don't do easy work. Don't do easy work. If there are 10 papers to be done, please do at least 10 papers. Don't try to do two papers and say, I tried two papers. Yeah, I'm very much happy about you. I think someone is mentioning I'm at 43, two daughters, still I'm trying. I think I'm very proud of you because your attitude is great, right? That's important because that is important because you will become chartered accountant sooner and you will achieve a lot, right? So those who are young, don't think that I was wait till that point. No, you get through faster if you can. Hard work, don't give up. Don't give up. And there could be reason why the people couldn't do it at right times. But if you are getting a chance to do it this time, please pass the exam. Please try as much as possible and pass the exam. Okay, so I think that's what I could say about uh, whole thing about this profession. And I've been very happy that I was given opportunity by CA Sri Lanka to share my knowledge with you all. And I'm sure like it would have helped you at some point, some triggered your mind. So all the very best for all of you all. Please do, please be on time for the exam. Don't delay, go on time. Even if you are late comers for anything, for the exam, go early. And please, as a risk management, if it's possible, take few pens, take few kind of, the calculator. If you have two calculator, better bring two calculator exam all and go on time and be confident. Be confident. Definitely, the new world is waiting for you. You become chartered accountant, you will feel it. All the very best, everybody. Thank you very much for the opportunity, see Sri Lanka, and for you all. Thank you very much.